I gotta say it. This is not financial advice, nor should it be construed as financial advice. Not interested in being your financial advisor and or managing your money. I want to get that out of the way. Bellas and Bellas, welcome to Moxie, episode 9. In today's conversation, we are going to further elaborate on some of these companies that I mentioned in last week's episode about semiconductors. So this is part 2. Several viewers of part 1 left me comments asking questions, which I appreciate very much. I also appreciate everyone that reached out to me in private as well with any, tips, also questions. Therefore, in this video, I will be going into further detail about Intel, ARM Holdings, and Broadcom. And we're blowing up spots to bring you the facts. So buckle up because we're in for a ride. And without further delay, let's slide right in. So let's first start with Intel. Intel Corporation designs, develops, manufactures, markets, and sells computing and related products and services worldwide. Intel is one of the few semiconductor companies that is fully integrated, meaning that it designs, manufactures, and markets its own chips. Other companies that do this include Samsung and Texas Instruments. Companies like NVIDIA and AMD design and market their own chips, but outsource their manufacturing to companies such as Taiwan Semi. Taiwan Semi, if you remember, as previously mentioned in part 1, they actually manufacture 90% of the chips. They are what is called a foundry. Basically a factory for chips. So let's discuss Intel's past troubles. Intel missed on mobile. Intel failed to design the processor for the iPhone and Android-based smartphones. Let's take a look at a teardown of the iPhone 3G, which was the second iPhone and the one that popularized the iPhone and brought it to the masses worldwide. The original iPhone sold about 270,000 units in its first 2 days, and according to Wikipedia, a total of 6,124,000 units were sold. Whereas the iPhone 3G sold 1 million units in its first 3 days. It took the original iPhone 74 days to sell 1 million units. As you can see from the teardown, the iPhone 3G was powered by a Samsung processor. Intel did not make a single part of the 3G. Subsequent iPhone processors were made by Samsung and eventually by Apple itself using ARM's architecture. Whereas Android-based phones mostly use Samsung or Qualcomm processors. Intel troubles with the 3 nanometers. Intel's development of 3 nanometer chips was full of setbacks. For instance, Intel had design problems of its Meteor Lake processor due to a glitch of the GPU chipset. Also, in 2021 and 2022, Intel, which is supposed to make its own chips, outsourced production of the 5 nanometer and 3 nanometer. And guess to who? To Taiwan Semi, because it was having issues producing such chips in its foundry. These guys had all the excuses in the world as to why they were outsourcing their chips manufacturing to Taiwan Semi. But word on the street is allegedly, in reality, it's because they couldn't get it done. Intel's dividend cut. In 2022, revenue fell 20% to $63 billion amid an atrocious PC market. This caused net income to drop to $8 billion, including a $664 million loss in the fourth quarter. Even worse, free cash flow, which exceeded $11 billion in 2021, fell to a negative $4 billion. Yeah, you heard that correctly. negative 4 billion. As a result, Intel slashed its quarterly dividend payout by 66% to 0.125 per share. Intel's reorganization. On February 22nd, 2024, so just a couple of weeks ago, Intel announced a major restructuring of its business. Intel will be reorganizing by splitting itself into two, by separating its chip making and its design businesses. Intel Product Division and Intel Foundry Services. So Intel Product Division will focus its efforts on development and licensing client, desktop, and networking kit. In effect, this Intel products arm will function more like a fabless chip maker than it has previously. The chip making business will be called Intel Foundry Services. It will be expanded to include the chip maker's technology development, supply chains, fabrication, and packaging services under the IFS moniker. These two organizations will be legally distinct and have their own staff and processes with minimal overlap to ensure confidentiality. In short, the foundry business will compete against Taiwan Semi and other foundries and will manufacture chips for different companies, including NVIDIA and competitors of Intel, such as AMD. For Intel Foundry Services to be successful, it must do two things. First, it must be able to manufacture the world's most advanced chips. We know that Intel has had problems with this in the past, including in 2021 and 2022, which wasn't that long ago, when it had to contract the manufacturer of 5 nanometer and 3 nanometer chips to Taiwan Semi. Second, Intel must gain the trust of third parties looking to use Intel Foundry Services to manufacture their chips. Intel has to be able to show that Intel Foundry Services is a totally separate and distinct entity from Intel Product Division, and the proprietary chip designs that Intel Foundry Services is given will not be shared with the Intel Product Division. Otherwise, why would any company, much less competitors, ever give Intel their proprietary chip design information that took so much time and money to develop? Let's talk about ARM Holdings now. ARM Holdings is a British semiconductor and software design company based in Cambridge, England, whose primary business is the design of central processing unit CPU cores that implement the ARM architecture family of instruction sets. ARM develops the instruction set architectures, ISAs, and licenses them to other companies who build the physical devices that use the instruction set. It also designs and licenses cores that implement these ISAs. An example of this is Apple's processors for its iPhones, iPads, and most recently, its MacBooks. It's not really an Apple processor per se, as the processor is based on ARM's architecture and instruction set. ARM is different than Intel. ARM doesn't manufacture any chips themselves. Instead, they design the architecture and cores of a processor and then partner with companies like Apple, Samsung, and Qualcomm who license those designs to build their own chips. Brief history. 1990, ARM is founded as a joint venture between Apple, Acorn Computers, and VLSI Technology. Its job to design a chip for Apple's developmental Newton personal digital assistant. April 17th, 1998, ARM goes public, listing in London and the US. The shares jump in their first day of trading. July 18th, 2016, SoftBank says it plans to take ARM private in a deal valued at $32 billion, surprising the global chip industry. The acquisition closes in September 2016. The stock vastly outperformed the FTSE during its time as a public company. September 12, 2020. SoftBank nears a deal to sell ARM to NVIDIA in a deal worth more than $40 billion. The deal would later attract regulatory scrutiny. February 9th, 2022, NVIDIA and SoftBank scrap plans for the deal, citing regulatory challenges. SoftBank later says it is exploring an IPO of ARM. September 13th, 2023, ARM's IPO prices at $51 a share. September 14th, 2023, ARM starts trading. The stock opened at $56.10, closing at $63.59, up about 25% from the offer price. Today, ARM CPUs are virtually used in all smartphones. They are very sought after because of their low power consumption. ARM processors are generally known for being more power efficient than x86 processors from Intel and AMD. ARM's RISC architecture. So one of the biggest reasons ARM uses less power is its RISC, which stands for Reduced Instruction Set Computing architecture. RISC architectures have simpler and fewer instructions compared to CISC, stands for Complex Instruction Set Computing architectures used in x86, out-of-order execution. Another power-saving technique used by ARM is out-of-order execution. This allows instructions to be rearranged and executed in parallel if their inputs are available, without waiting for previous instructions to finish. By keeping execution units busy, power efficiency is improved. Older x86 chips relied more on increasing clock speeds for performance, which consumed more power. Integrated memory controller. ARM processors have an integrated memory controller built right into the CPU chip. This removes the need for a separate external memory controller chip. Having the memory controller integrated reduces memory access, latency, and power consumption. x86 historically relied on a North Bridge memory controller external to the CPU. Power gating. ARM makes extensive use of power gating, which allows sections of a processor to be turned off when they're not in use. This saves leakage power in unused logic blocks. ARM implements fine-grained power gating that can disable smaller subblocks. x86 has trailed ARM in adopting aggressive power gating techniques. Multi-core and heterogeneous designs. ARM cores are smaller in size and power efficient by design. This makes it easier to integrate multiple ARM cores into a single chip, called a multi-core system on chip, SoC. Having multiple simpler cores is more power efficient than one complex high-performance core. ARM also utilizes heterogeneous cores with different sizes and power levels for different tasks. ARM processors are manufactured by third-party foundries like Taiwan Semi and Samsung. The foundries have historically led in smaller process nodes, which have lower power from transistor scaling. Intel manufactures x86 chips internally and has sometimes trailed in adopting newer manufacturing processes. Focus on mobile power efficiency. ARM has focused on the mobile and embedded markets, which demand power efficiency for battery life. x86 historically targeted desktops and laptops, where performance took priority over power. But as x86 has moved into mobile, power efficiency has become more critical. Simpler core microarchitecture. The ARM core microarchitecture itself is simpler and smaller than x86 in terms of pipeline stages. This translates to improved power efficiency. x86 cores have greater complexity to support legacy x86 instructions. Clock gating. ARM makes extensive use of clock gating to prevent the clock from reaching idle circuitry. This reduces dynamic power consumption proportional to switching activity. Clock gating allows unused logic blocks to be temporarily turned off without losing state. Voltage and frequency scaling. ARM SoCs support dynamic voltage and frequency scaling, which allows the voltage and clock speed to be lowered when full performance is not needed. This provides a cubic reduction in dynamic power. x86 historically did not focus as much on power-aware frequency scaling. SIMD and vector processing. ARM has added SIMD, which is short for single instruction, multiple data, and vector processing options like Neon technology, which is a packed SIMD structure to improve performance for media and math code while maintaining low power. Trust zone security. ARM Trust Zone provides hardware-level security while minimizing power overhead. A dedicated secure world isolates trusted code from untrusted apps. x86 historically relied more on software techniques for security, which have higher power costs. Since going public in September 2023, ARM has more than doubled. ARM is trading at nosebleed valuations, yet it doesn't have the growth to justify these valuations. I personally believe that the reason ARM has moved up so much is because it trades in the semiconductor space, and right now all the semiconductors are going up for the most part, except for last Friday, but we're going to discuss that momentarily. Also, when it went public, software retained a 90% stake in ARM. Therefore, ARM, in essence, is a controlled company. As a controlled company, new investors will have absolutely no say in determining the outcome of matters submitted for shareholder approval. In its F1, which is a form filed with the SEC by foreign private issuers, ARM notes, as a controlled company, we have elected not to comply with certain corporate governance requirements applicable to most NASDAQ-listed companies. Accordingly, you will not have the same protections afforded to shareholders of companies that are subject to all of these corporate governance requirements. In short, I believe that ARM is currently overvalued, and I am not buying this stock unless it comes down significantly. Additionally, if SoftBank decides to sell and unloads too many shares at the same time in the open market, supply will outstrip demand and shares will fall significantly. That being said, a rising tide lifts all boats, and if semis keep on going up, I believe that ARM will continue to go up with them. Now let's discuss Broadcom. Broadcom is a designer, developer, manufacturer, and global supplier of a wide range of semiconductor and infrastructure software products. Broadcom's products offerings serve the data center, networking, software, broadband, wireless, storage, and industrial markets. As of 2023, some of 79% of Broadcom's revenue was coming from its semiconductor-based products and 21% from its infrastructure software products and services. So why does Broadcom have the ticker symbol AVGO? This is because Avago Technologies Limited acquired Broadcom back in January 2016 and changed its name to Broadcom, but left the stock ticker symbol as AVGO. In November 2023, Broadcom completed its acquisition of VMware. VMware is a cloud computing and virtualization technology company. For example, virtualization allows you to run Mac OS on a Windows computer and vice versa. On March 7th, 2024, so just a few days ago, Broadcom stated that it expects $10 billion in revenue from chips related to artificial intelligence this year. But its stock dipped after the tech company's full-year forecast failed to impress investors. Out of that amount, about $7 billion of the firm's AI chip revenue in 2024 would come from helping just two major clients design custom AI chips. Although the names of the customers were not disclosed, analysts widely believe that they are Alphabet's Google and Facebook's Meta. According to Broadcom's CEO, the custom chip business can, quote unquote, command margins similar to our corporate gross margin, end quote. That gross margin was about 75% on an adjusted basis for the fiscal first quarter. Reuters reported last month that NVIDIA is looking to compete against Broadcom in the custom AI chip market. However, Broadcom did not update its annual revenue forecast of $50 billion, likely disappointing investors despite representing growth of 40%. As previously mentioned in part one, I'm long Broadcom and have been for quite some time. According to Yahoo Finance, the stock is trading at 40 times earnings for the trailing 12 months, or TTM. Broadcom has a forward price to earnings ratio of 30 and a PEG ratio, or price earnings to growth ratio, of 2.12. I'll let you in on a little secret. I intend to buy more Broadcom when the PEG ratio comes down to under 2, so long as the technical looks good. I actually like the PEG ratio as one of the measures to evaluate profitable, mature companies. The rule of thumb for me, companies with a PEG ratio of over 2 is too high, and companies with a PEG ratio under 1 are extremely attractive. Keep in mind that sometimes when a company looks the cheapest on a PEG or PE ratio is when it is the most expensive. This happens when we are heading into a recession, or for semiconductors specifically, when there is a glut of chips that will force the companies to cut pricing. But the analysts have not adjusted their earnings to account for this yet. Conversely, there are instances when a company looks very expensive on a PE and PEG ratio, such as when we are coming out of a recession, but the company is at its cheapest. This happens when analysts have not updated their forecast to account for this. As an example, when we were coming out of the Great Recession in 2009, Caterpillar looked insanely expensive because analysts had not adjusted their earnings. However, in reality, it was at its cheapest and should have been bought there. In conclusion, remember, we're in the early innings of an AI super cycle where all types of businesses and industries are adopting AI to assist them in their operations and endeavors. AI stocks have moved up significantly in a short period of time, and they are due for a pullback. I said that in the previous video. Semis were actually down on Friday, March 8th, and it might be the beginning of a pullback, which I personally have been waiting for so I could add to my respective positions. Just saying. Volatility is expected in the semiconductor industry. It is what it is. I'm personally not panicking. I'm not panicking one bit. If there are any other questions regarding real estate, finance, stocks, and investing that you would like me to cover, please feel free to drop a comment. And thank you so much for watching, and have a beautiful day.